Hi everyone, welcome to Your Money, Your Call. I'm Nina. Gentlemen, we've got plenty of callers waiting to talk to you live on air. Let's go straight to our first one. We've got Nikki from Brisbane. Hi Nikki.
Hi, how are you?
Very well, thank you. And what's your question for the panel?
Certainly. I'm calling about HFA, Hedge Fund Australia. In the last month, it's doubled its share price leading up to its reporting yesterday. There were no surprises. It came in line with expectation. In fact, it surprised a touch to the upside. Yet it's retraced a fair bit on relatively heavy volumes over the last 2 days. Do you think it's just currently being shorted after the fact, or can the panel maybe give me any insights into the direction of its share price?
Roger, what do you think?
Look, I think it's important that investors find the best quality businesses in each sector, and the funds management business is a wonderful business to be in. I know that from personal experience. They generate very high rates of return on equity, they require very little capital, and the returns obviously are all distributed to shareholders. And the margins are enormous as a result. But I think there are better businesses than HFA. There are better quality. From a shareholder's perspective, there are better businesses out there. One that comes immediately to mind is Platinum. You know, I think Platinum is just a wonderful business with a terrific track record, and I think bright prospects. We're going to stay in Brisbane. We've got Gavin on the line now. Hi, Gavin.
How are you going?
Hi, well, thank you. Thanks for dialing in.
Thanks. Look, I was just wondering what the panel thought on a company called Prima Biomed. I'm just looking at buying at the moment. It's PRR as a code.
Prima Biomed, I believe it is. We'll get the chart up on the screen so my panel can take a look at it. We've had a few calls in the last couple of weeks about this particular stock, and that chart would probably indicate why. Is this one
the problem with all biotechs is a lot of you hear people often say, I've just invested in a biotech. It's actually an oxymoron. If the business hasn't got a product in the marketplace and it isn't selling and there's no revenue, then there's no way of valuing that. You don't know. It's purely speculative, and very difficult to value. So how do you know what to pay for it?
But people, I mean, there's so many. I guess so many of those biotech pharmaceutical companies around that they want to find the one that gets the approval that sells its vaccines or drugs or whatever it's looking at doing, and makes a mozza out of it.
Yeah, look, there's potential for making a mozza from the share price going up, and if you can get that right, you know, more power to you. But it's very, very difficult to do.
Yeah, all right. Gentlemen, one that you most certainly will be well aware of, Rio Tinto. Todd, you touched on that in your opening comments. Just wanted to ask you, Roger, Chairman Jan du Plessis said the company took swift and decisive action to respond to the global economic crisis and, of course, the sharp falls in metals and minerals prices. Says the company is better positioned with renewed financial strength and a leaner cost base. What are your thoughts on those comments?
Anyone who comes out and says they now have a leaner cost base, I can always ask, well, what were they doing before? You know, the approach to costs is to take the approach of that wonderful story of the woman in the United States whose husband passed away, and she called the newspaper and said, you know, I need to put an ad in the obituaries. That's fine, madam. What would you like to do? John Smith died. And they said, no, it's a minimum of 7 words. Oh, John Smith died, golf clubs for sale. You know, you have to try and save money the way you breathe. You know, it's something you're doing constantly. Rio Tinto, and I've said this before, Rio Tinto is an inferior economic entity to BHP. BHP is a superior business that has a better balance sheet, it has less intangibles, it has less debt, and it generates more profit. And so as a result, I always prefer BHP over Rio. But as I've said also in the past, there's a lot of institutional interest in big cap companies in Australia. There's 3,000 funds following 2,000 stocks, and the big ones are where the liquidity is, so that's where they tend to be. But small investors, particularly the people watching this show, don't have to follow that particular approach. You know, they can look, they can choose, they don't have to be there. And BHP is a better business. Both businesses at the moment are, in my view, more expensive than their valuation. Rio more so than BHP.
BHP currently $37.13 and Rio at $58.03. Let's go to our next caller. We've got Ben, who's in Brisbane. Hi, Ben.
Hi, how are you going?
Hi, good, thanks. Thanks for joining us tonight.
Thank you. The panel's kind of already asked most of my question just about a biotech BPO, Bioprospect.
Unless you can be very confident about who is going to dominate the particular space that the company operates in 5 or 10 years' time, then it's next to impossible to determine what its growth is going to be. It's next to impossible to determine what its return on equity is going to be. And if you can't do that, you can't value it. And if you can't value it, you don't know whether it's cheap or expensive. So it becomes very, very speculative if you're going to buy the shares in it.
So I guess you go into it with that view that it's a purely speculative play.
Absolutely. You need to think about, well, am I confident that this is going to be the dominant technology, or is Boral going to turn around and come up with some, some method for building homes that's completely termite-proof and you're never going to need anyone to actually do that? Or is there going to be some other thing that comes out that protects homes and therefore we don't need this technology?
Well, whatever.